Welcome back, folks. This is the ICT Mentorship Weekend Edition of October 11th, 2020. And before we get into this, if you have not watched the midweek review from this past week, go back and watch that one and then come back to this video. All right, so we are in a market environment that is highly unpredictable. And it's important, before I get into this, to remind you that while everything is still working to the pip with precision, I am constantly here to remind you that at any time leading up into the week of the election, things can go haywire. Okay, so I want you to be mindful of that. Don't let this commentary lull you into thinking that everything is safe or normal or the typical market environments that we like to work and operate in. So just as a precursor and a caveat, you have to just appreciate the level of risk that's in the marketplace right now. Even if it looks perfect, even if it looks textbook ICT, okay, I want you to constantly remind yourself that we are in troubled waters. And it's better to respect the measure of risk that's in the marketplace right now that no one else is really talking about. They're just, let's get in here and just trade. Let's trade. As a mentor, I want you to be here for years. Okay, I want you to be able to have longevity and give yourself the time to develop properly, but don't consider any of the potential near-term volatility as a means for fast windfall profits. Okay, it's important that you understand that, and I'm going to harp on you every single time we get together until we get on the other side of the election. Okay, so if I annoy you, just know that it's coming with good intentions and it's only for your benefit and protection. Okay. All right, so the dollar daily chart. All right, you can look at the price action in here, and let me scrunch this up a little bit. And I talked about this area in here in the previous commentaries where this is balanced. Okay, and the reason why it's balanced, it's back and forth, where the wicks and the tails have basically overlapped in a period of price action that I will add now, and all the other annotations will pop up too, but from this area here, this high, to this low. So all of this area here, and I'll just add a little rectangle just to overemphasize the range I'm referring to. All right, and I'll change that to a slightly different color. Let's use that. Well, that's probably not good enough, is it? There you go. That's good enough. That way it's not too distracting. So this area in here, I dubbed that as a balanced price range. Now, in other instances where you've seen me discuss where the market trades down and then comes back up all the way into it, that would be a balanced price range as well. But in terms of a trend where the market's been moving one-sided, there can be short periods of balanced price range. Whereas inside this candle here, okay, we opened, traded up, and then traded lower and then closed here. On a down close, but we delivered price action both directions. Okay, so specifically from this candle's open to the high, that delivery has been buy side offered, sell side offered. So if you extend that range in time, you can see the reaction of it here. It goes a little bit into the range, but it's met with stiff resistance. It opens on this candle, trades up, doesn't overlap too much of this candle. And I'm going to just drag this over so you can really appreciate the range here. Okay, so while I'm overlapping a little bit onto this candle, it's specifically this high and this low I'm referring to, as you can see in the shaded area. But the next candle here, we open, trade up, and then back down. So now we have a balanced price range from the open to the high and an open to the high. So now there's two times that this open to this high has been traded back and forth. Okay, so you can reduce this range. Had we traded up a little bit more, I would have expected really stiff resistance at that open as a result of that. The next candle, we open down here, we trade back up and then back down. Okay, so in this candle, we had opened up here, traded down, and came back up. So from this low to this high, prices moved back and forth. And then we had a difficult time getting up into the previous candle's range, and then it was met with heavy selling. So when we left this range, being the previous candle's low, which is the high end of a fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. Now I'm probably confusing you, hitting you with vocabulary Uzi, just throwing everything at you, but you understand these things because of the content and concepts that I've been outlining and teaching you along the way. All of the things I just outlined here, and the fact that we had the small imbalance there, was leading me to the opinion that I gave you that if it trades up here, it may be met with selling. So in other words, when we were bullish down here, we were looking for short-term bullishness that would take us up into this area here potentially. And if it traded there, we'll watch to see if it has any willingness to decline. Because if it does, and it has an inability to trade up into that range, that would indicate that this is in fact a balanced price range, and any near-term bearishness that would be lingering, okay, could be easily spotted with the signatures and price action that the algorithm gives us. One being the up close candle that traded up into it, the bodies respecting that range that's shaded. See that? While we did get a wick here and a small little wick here, that was an inability to get up into that balanced price range, which is a signature that you look for reversal patterns. Now, I'm going to be slowly segueing into a topic that I have purposely deferred until now, because there's certain things that you need to understand and have been exposed to thus far. And I'm speaking specifically to the 2016 group. Now, you all listening, because you're all mentorship level, and every commentary is available to every mentorship student on month one all the way throughout the charter, you're benefiting from this. But don't discount this as, well, I'm on the same level and understanding that a 2016 charter member has, because you don't have that. You don't have the experience, you don't have the time with me, and you're just not there yet. And it's not a knock against you. I'm not trying to talk down or discourage you. I'm just reminding you, don't let lessons like we're going to begin now and going forward throughout the rest of this month in October, don't let it deceive you into thinking that you know more than you really do. Okay, it takes time to appreciate these lessons, because as you'll see, you can quickly become conflicted. Okay, and that's why I purposely waited to touch on this topic, because reversal patterns are very subjective. Okay, and when I say that, it may cause doubts or uncertainty to arise and say, okay, already I don't want to do reversal patterns. But as you'll learn, you have already been exposed to reversal patterns. It's just how that reversal pattern fits in the grand scheme of things, or the current narrative that's in the marketplace. Now, this is the reason why I'm telling you about all of this and not jumping right away in to see how smart we were. Okay, I'm talking about this as the narrative because I want you to go back and watch the recordings prior to this swing up here. You'll hear me give you all of the hints and all of the ideas to be looking for what we see now in price. Now, there's nothing over here just in this price action, except for what I've outlined, that would lend to, okay, this is a resistance idea or a retail idea to anticipate something going lower. Now, if you go back farther in time, sure, you'll find a low, a high, or something like that. But on the near term, if you understand what you're looking for, you don't need to go back so far in history to find something that will be form fit perfect. Okay, so That's one of the things that I tricked myself into believing back in the 90s, that if you go back far enough, if you go back 47 years, okay, you'll find something. And in that one little turn, I would justify everything and build this idea that my trade's going to work because I found something 47 years ago, and because they did it then, it will happen again. And if you really think about it, that's really in essence what support resistance is trying to sell you, because they did something in an undefined amount of time in the past, therefore it should work in the future. When I used real money and tried to trade with that stuff, it was always the wrong level I used for resistance for shorting, and it was always the wrong level for support when I was trying to buy. Okay, it would go to some other level that, for whatever reason, I didn't notice it at the time, and I would lose money. So in the 90s, when I started observing these things that IPTA is doing every single day, it was a huge paradigm shift. And I started to look at things differently, as you're learning now as a student of mine. And you get like this insatiable desire to learn more. You want to learn more. And that's why I say all the time when I'm doing my quote unquote marketing for mentorship, if you want to learn how to be profitable, you can do that right out of my YouTube channel. There's no excuse for anyone not to have digested every one of those videos and come to a very specific, easy, optimal trade entry, time of day, what to look for, why you should be looking to buy, why you should be looking to be a seller only, and focus on that, and you can be profitable. I teach money management on the YouTube channel, so there's no necessity for you to be in the mentorship here just to find profitability. Mentorship here is for you to be a freak, okay? And that's not a derogatory statement. It's a close description of somebody that is passionate about knowing why everything is happening, why it's most likely going to happen at specific levels well before it trades to those levels, okay? And it gives you a level of anticipatory skills that you just don't get from my YouTube channel, okay? So the lessons that we're covering in this month are very unique. They're very specific to the lessons you've learned already in your YouTube channel and also in the core content lessons. So we're going to be really jumping ahead and putting in portions of what you've been exposed to into their proper location, okay, and how to look at that and build narrative. Because as I've already stated, the flagship of the mentorship program is for you to borrow my experience. So when I'm pointing at things, I'm suggesting that the market's going to react at this level, and then it's going to go towards this level in that direction. It keeps everyone, hopefully, if you submit to it, on that thought process. So it keeps you on side in all of your practicing and all of your demo account, not your live trading. That's why I tell you, don't trade with live funds, because if you haven't been exposing yourself to operating in the level of targeting that I'm pointing to when we do our commentaries, number one, if you're resisting that because you want to go with your own analysis and you abandon what I'm suggesting, you're cheating yourself of the lessons that's available to you. Otherwise, it just looks like, well, I shouldn't have arm wrestled ICT, and I'm upset. So you'll focus more about the negative result that you got by going against me or fading what I'm doing in the commentaries. I'm pointing to something. I'm showing you there's your target, and you have to find a way to facilitate a setup or a practice session, even if it's in hindsight, that leads to the market moving from wherever the market is at the time when I'm doing our commentary to that location. There's always some way of framing it, and there's uniform repeating things that you'll find that 25 of you in this group could sit at a table and you all could come up with a different way of entering and managing it, and they're not incorrect. They're all correct, because you're going to be using a different time frame, the different framework, but to operate in the same underlying narrative. So I say all this to remind you that while we are sticking our toe in the water in this session with reversal patterns, I want you to remember that even though the term reversal isn't always indicative of a complete trend change. Okay? And what do I mean by that? This movement up into this area that turned price, we had already anticipated that likely happening. Now, it could have just rallied right on up in there and rolled right over top of this, and that's fine. But you have always some measure of uncertainty that you have to embrace as a speculator. If you aren't comfortable with that, you're not going to be a trader. And there's nothing that I'm going to teach you that will overcome that initial fear. You have to welcome the likelihood of you being wrong. And that's why having good money management and risk management and trade management, and they are all three different separate animals. You are encouraged by having not over leverage your account. So that way, if you do take a loss, it doesn't completely deter you from your goal or set you back so far that you have to repair months of equity increase because of one or two ridiculous over leverage or lack of properly managed trades with a stop loss. So if we look at price in the context that there is no real trend, if you say it like that, it may be a contradiction to what you may think you already know. And that's why I stay in the lower time frames and give you lots of examples, because you can trade just the volatility and not have any bias, and you can still get pips out of the day. You can find setups that would be contrary to what you may arrive at on your daily chart. And this is why I said if we had like 25 people randomly selected from this group from all different starting points, and I sat down with you and we were all in a recorded session, okay, so that way we could watch it all after the fact and have everyone's input about what they did or how they see price in this price leg here and all this up here, how they would have or did engage with the price action. And you'd be surprised how many various approaches using the things that you all been taught, how there are still so many ways to skin this cat. And it would be astonishing, probably bewildering to some of you, that you all think many times when my students begin with me, they come in, they do one or 2 months, and they're starting to think, well, I think I got this figured out. Michael only trades like this. And you have no idea how I'm trading, because I can use all of the things that I'm exposing you to at any given time. Like I could use every single PD array available in the matrix and trade short, dollar, long, foreign currency. That was the reason why I was showing you YouTube channel executions where I was buying and selling in the same day, back and forth, because I understand what the algorithm is going to do. You see this with me using a daily chart, and the daily chart is still delivering to the pip precision. And again, remember that reminder I gave you at the beginning of the video. Don't let me sell you into the idea that right now you should be going in there and anticipating perfect precision all the way into the election. Okay, I'm just tossing that back in there in case you forgot. But because I'm doing it with the lower time frames in examples, like folks outside the mentorship, they'll have highly critical opinions because they have no idea what we're doing here. They have no idea what I'm exposing before it happens. They don't have any idea where we're looking at before price does it. And if you just read into the public's perception about what we do, and specifically I do, they're thinking they got it figured out. And when the market drops a little bit, they think they're smart. And then it rages against them, and then they forget about talking about the market again because they either got stopped out or they didn't take a trade and they wanted to look smart, but it railroaded them, and they can't claim, look how good I was because I called that move. They think that we, and me specifically, are just 10 pip, 15 pip, 20 pip scalpers, and that's not true either. I give many examples intraday because it shows that there's no shortage of opportunity, and you can build this into whatever you want it to be. You want 1,000 pips a month? You can do that. If you work at it, you can do it in a couple swing trades and fill in the small little gaps with day trades and intraday scalps. And you can get 1,000 pips every single month. Every single month. But I don't sell that in the narrative around mentorship or my lessons, because if you spend the time with these tools and the teachings I'm giving you in the lectures, you will come to that conclusion on your own. And it's just like when I say about live trading, I never tell someone you're ready to trade with live funds. I don't care how many demo accounts, that you can take from whatever starting balance to whatever. That is not the same thing as going into live trading, because as soon as you put live trades in there, all the things that you've been learning to do in a demo are going to now finally be tested with live funds, even if it's a small account, because you're going to want to excel fast because you've done so well in a demo. You're going to be wanting to say, okay, well, I'm really good. I'm going to take this account and I'm going to parlay it up to whatever, 30% a week, okay, or 100% a month, something to that effect. And that's unreasonable. That's unrealistic, and you should not have that expectation just because you're a superstar in a demo. You have to learn how to suppress that greed and ego. You may not think you have an ego, but you do. If you've learned how to do this extremely well and consistently in a demo, you have an ego. You have pride, especially the men. Women, not so much, but women still can be caught up in that insatiable desire to jump ahead and make up for all the time they've been practicing in a demo and learning. Let me get back to where I would have been if I would have been trading with this information from the beginning, which is unrealistic. But you think about it, everyone that has jumped from demo to live trading, they've done it on their own. I've never counseled them in an email or spoke to them on the phone or said it in a video. You're now ready. You're never going to hear me say that because it's an individual decision. So when you have reversal patterns, you thought I moved away from that, didn't you? When you have a reversal pattern, it is not a reversal of everything you already learned. You're going to find that the reversal pattern is just a continuation of what you've been learning. And that's the reason why I've been pushing it to the back end of the mentorship cycle of what I'm going to cover. And it won't be consumed or completely exposed and revealed and taught on. And in other words, October will not be the final discussion on reversal patterns. It's just we're introducing it now. So I want you to know that the context I'm using, especially with this area in here, okay, this is a continuation. Even though on a short-term basis, on this run here and from this run here, this is a reversal. But this is just a continuation of an underlying downswing on a higher time frame daily chart that the dollar has moved from. Like prior to all this run here, it's been dropping. So it's easy to get confused, especially if you're not well versed in multiple time frames in top-down approaches, say it that way. Looking at this idea, I can dress this up and put lipstick on the chart and say, this is a reversal pattern. This is this and it's that. And a new student that hasn't been with me for a while will assume that this is a reversal pattern that suggests that the dollar should drop down to 50 or 60 cents, whereas it's trading at approximately 93 cents now. So if we keep in our mind going forward that when I say reversal patterns, it is not a statement that says everything has reversed on all time frames at this specific price point, okay? So that we understand what I'm referring to. All I'm saying is there's a reversal in the underlying direction on a near-term basis. Just like there was a reversal down here. Just like there was a reversal here. There was a reversal here. Here, 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 there, there. You don't think it's a reversal? You're probably looking at that. That's not a reversal. Really? Okay. Go short down here at that price and ride it all through here. And then get out of your short and then buy it along there. And then ride it all the way down to here. It's going to sure feel like a reversal pattern then. So you see how this topic can be immediately confusing to someone coming in like on a month one basis. I have wrestled with talking about reversal patterns in the commentaries because I know some of you are just now getting to month 4 or month 5, and others are just getting into charter, and there are charter members that's been here for a while. That really is the target audience that I wanted to talk to, more specifically the 2016 group. But since there's no way I can introduce it and cover it all in 1 month in a few commentaries, I just started to bring it out now because I get a lot of questions, and I'm answering a lot of trade psychology questions and thoughts on when the market's reversing. How do I know when it's reversing? What is a reversal? Okay, that is subjective. And what you see on these turning points here, if we drop down to a 5-minute chart, 15-minute chart, or an hourly chart, then the things that I've outlined for this being a potential turn prior to it running up there and turning around would be the same ideas at these points on a 5 or 15-minute time frame, or even an hourly chart. But because this price action we're looking at here is a daily, we're just looking at the fractal nature of price action. So again, I've done a lot of talking, and I probably didn't make a lot of sense to some of you. But again, this is the reason why reversal patterns are something that if you don't fully appreciate the other concepts and other processes that I've introduced, you can get quickly confused. And I don't want people to watch this video and come up with 20 different questions or instances where, yeah, I was trading the dollar Swiss and I did this and I thought this was a reversal pattern and it didn't work here. And why did it not work here? I don't want to see those kind of emails. Okay, I don't want to see those because so many of the new folks come in, and as soon as I touch on something new they haven't seen in their core content lessons, immediately I get slammed with emails that have, I got a quick question for you, and it's like 5 paragraphs long, and if you really count the question marks in there, it's 20 different questions. And I'm sure it's frustrating when I respond to them eventually and say the things you're asking are taught by experience and being in the mentorship and future lessons. Okay, so I want to remind you also in the concepts of reversal patterns, you're not going to learn 12 different reversal patterns. Okay, you're not going to do that. What you're going to learn is specific points in where price is signaling, okay, or giving you a signature that helps you identify, yeah, this is where price should have a near-term reversal and what patterns should occur or form there. And then once you know what you're looking for and what potential patterns should be there, you're not surprised. You're just waiting. You're waiting for that to form on the chart. And when it does, you go in and you engage. And what that helps you do is you start fleshing out future narratives without me pointing to them, which will be a new project for you. You'll be looking at the commentaries after you've already done your own analysis and anticipate what I'm going to say about certain levels, about specific markets, how they meld together. And then you will, I guess in a way, anticipate my anticipation. And then that's the sign of graduation. When you know everything I'm going to say in the commentaries before I put the video up, not just one time, because you're going to get that once in a while, but when you are consistently, week after week, month after month, for a full year, if you know what I'm going to say about the marketplace before it's put in the commentaries, you graduated. There's nothing else that you need to learn at that point. So there's your answer, Justin. How do you know that you've learned everything you're supposed to learn from the mentorship? That's your answer. You'll know when you know everything I'm going to say before I say it. In the 2016 group, there are half a dozen that will send me what they think is going to happen. And sometimes they're very, very long-winded emails. And in all honesty, I don't read all that because I don't have the time to get through it. I don't delete it. I'm just saying I just don't have the time to go through that. The short ones will say, hey, this is what I think is going to happen. And invariably, they'll come back with a smiley face, but I haven't read their email at the time because I'm months behind in correspondence. And I can see how you can see I sent the email. I said that before you did it. That's great. I feel so good. And honestly, as good as they feel, I feel better. That gets me riled up. Like, I'm excited. Like, when I watch these people get all crazy in the stands for their sports teams, I get nuts. I start parading around the house. My wife's looking at me like, what are you doing? But because I'm so excited, I'm sharing, I'm celebrating with you, but you don't see me doing it. But I want you to know that I am absolutely celebrating with you, because I get to feel that moment all over again. I don't know what your face looks like. I don't know where you are in the world. Okay. But I know that feeling that you had at that moment. It's like time travel. I go back to that moment when I had it for me. When I get to relive that. So I'm getting more than just money from this mentorship. Don't get me wrong. I get the moments of reliving all that over again when you all share your milestones with me. But if you haven't gotten that far in the mentorship where you're getting those epiphanies and these mile markers and progressions in your understanding, keep pressing and it will happen. I promise you. But if you just stop, obviously it won't happen. But there's going to be times where it doesn't feel like it's going to work for you, or you're doubting yourself. Don't do that. But also, don't think because we're starting to talk about reversal patterns, now we're going to go to the secret sauce, because the secret sauce has already been taught to you. All you're doing is seeing me put these things together in a framework before the right side of the chart makes these candles. That's the thing, okay? If I went and did 1 full month of mentorship for free, like that level of where it's going to go, what it's going to do, if I did that 1 month on YouTube, I would be killed with the influx of how many people want to come in, because they can see what we do then. I don't want that, because that's not what I'm trying to sell. I don't sell the idea of watch what I do and you follow and copycat me. Think about what you are being exposed to here. I give you tools. I tell you what they look like, and then I tell you where we are right now and where it's likely to go next. And then all you have to do is go in and practice which one that you start seeing easily in price. And that's the same thing that's going to be happening when we introduce these reversal patterns. It's not some new thing. It's not going to be a new list of different patterns. It's going to be the approach of putting these patterns in their proper place. And for some of you, it may be that little piece that you haven't had yet fall into place. And then all of a sudden, you're going to look at these charts and you're going to hear me talk, and you're going to know right away what it is that you should be expecting in price. And that power, okay, that sense of accomplishment and achievement, I can't articulate that in words. Like, I can't cheerlead it enough, because it literally is empowerment. Because once you get that moment, once you get that level of understanding, and everybody here can get that, but it happens at different and various stages of your learning. I've had people as early as month 3 get it, because they've studied profusely the free content since 2010. So they've been really working for it. And I've had people that started in Baby Pips that have not had that yet. So in full disclosure, I want you to know that there isn't some secret group inside all the mentorship that has all the bells and whistles. It's just how much time you put into it and what you're hanging on to that's impeding your development. Like, you wrestle with certain things and you may not realize it, but that's the purpose of keeping a journal. What are you worrying about ahead of the next trading session? And what did you worry about during the trading session that you're recording about in your journal? And by reading those things, and be honest, that's why it's not something you share with someone else. You don't share your trade journal. You don't trade your study journal and expose those types of things, because it's highly personal. And if you only reveal it to yourself and in that medium that you use as a journal, you're not going to be afraid to be honest. Share with yourself your concerns and your fears, so that way you can identify them early on. But don't give them power with the vocabulary of, I hate it when or I'm so stupid, oh, I'm dumb, I missed this, instead of saying, this was an opportunity I did not see at the time, but now I've learned how important it is to pay attention to that. You see the difference there? You're giving yourself permission to be wrong. You didn't see something, and now you've encouraged yourself with that missed opportunity to learn from it, use it as a means of gaining understanding. And that's what I want you to start all over again when we start looking at these reversal patterns, because it's going to feel like you're relearning it all over again. And in a lot of ways, I guess it's true. But I don't want to beat you up with all the talk and feel like it's just talk and it's fluff and there's nothing really behind it. But I want you to have a greater appreciation for the psychological impact of emphasizing too much on the word reversal. Okay, so with all that said, when price traded up into this level, we had price leave it here. We had a displacement. The narrative was it could potentially be turning when it gets up here, because of all the things I discussed over here. And again, that's why I'm saying go back and watch the recordings leading up into this, and it'll help you fill in all the gaps that you're just not remembering, but was said in those videos. When price broke lower than this up close candle, there's your bearish order block, that low. What's the low? 94.19. Price opens on this candle here, trades up exactly to 94.19 right there. So there's your bearish order block. So you could be a seller. Watch what happens now. You could be a seller above this candle's open. Why? Because that's the rejection block. Now, the rejection block is a reversal pattern. Didn't think about it like that, did you? When the market trades open and trades above it, if you have the idea that this is likely to cause price to drop or not go higher, you could be entering right on this candle's close, 94.58, or just above it. So you're selling above a price level that you've identified, that you've learned about here in this mentorship. When the market breaks lower, if you did not take that trade, no problem. Wait to see if there's displacement. We get it there. Okay, so when price breaks lower here, then you can put a limit order to sell at this candle's low, maybe 5 pips below it, because it should trade up to that level. And then if it does trade to that level, we anticipate what? The narrative that's over here, based on all the ideas over here. And it's a short-term rally we're anticipating. We're anticipating a rally up because it's been trading lower. It already worked below these lows with this run. It went below this low with this run. And then we had a short-term break in market structure here. It came back down and then rallied as we expected. But it hit a level that we expected it to trade up to and then offer resistance. And now we're looking at it here. But if you have this narrative understood, isn't the trading back to the bearish order block right here and going short, isn't that a reversal pattern? Yes. It's the reversal in this one particular candle. And it's to the pip. You see how getting too keyed up on the word reversal can cause a impediment to your understanding and your learning, because you're going to be looking at it as a descriptive term to outline a greater overall reversal, which that might be true, but not always. Okay. If you look at the order block like this, that's a reversal pattern. It's on this day, it opens, it trades up, hits that level, and we'll drop down the lower time frames in a minute. And you'll see when it rallies up there, that's your reversal pattern, because it's based on the higher time frame, bearish order block, and the narrative that we outlined over here. Okay, so then we have the fair value gap here. On Wednesday of last week, I said that we could have a short-term rally on the lower time frames on the dollar and take out some buy-side liquidity, or it could return back to the low end of the fair value gap, which is this level here, the 93.78 level. That's this candle's high, 93.78. That's what this level is extended out in time. I said that we've seen some reluctance. They want to go back above it. And the market could open up, trade up above the short-term highs intraday, or as much as to the low of the fair value gap. Well, what's the high on this candle? 93.78. That's exactly what I said in Wednesday's video. It didn't go 1 pip below. It didn't go 1 pip above. It went right to that level. There's absolutely nothing in this chart that says that this candle should go to that specific price level and turn around, except for what I taught you using a fair value gap. It's not support and resistance. It's not supply and demand. It's the real market. But isn't that a reversal pattern? Yes. It reverses the candle, that daily high. Now think about how many times we've just already showed a reversal pattern, and they're all different. Did you learn something new? No. I didn't teach you a new pattern. I'm teaching you narrative and the logic that builds the framework that would constitute a reversal of sorts relative to a specific time frame. So now, with this in mind, and we said that it would likely trade up to that 93.78 level, and it did that on Thursday. And then on Friday, big washout day, attacked sell side liquidity here, and then we're aiming for this. All right, and how we trade below here is key. Okay, I personally believe if we trade below that, it's likely to go lower than this low. That's what I see in the chart right now. It could trade down there, okay, and as it's trading, if it gets there at all, because I could be wrong. But if it trades there and reverses immediately, aggressively, and trades back above this low, then I'm less inclined to feel that this low is in jeopardy. Okay, but if we trade down and we do so with a lot of momentum, then I'm not looking at this filling this bullish order block and then higher prices. I'm not seeing that in price right now. I'm seeing that if we go below here on an aggressive run and it doesn't immediately reject it, then we're just going to make a hard attempt to get below that low. And then that's going to really bring in a lot of bearish momentum for dollar and really higher prices on foreign currency. All right. So let's drop down finally to the hourly chart. A whole lot of jawboning in this one, wasn't it? But this is the stuff you're paying for. You don't know that that's what you want or need, but it's these lessons and these discussions help fit everything together. All right. So here's where price runs up into that area we anticipate as a very stiff area of resistance, a balanced price range. Bearish order block right here. Last big up candle. Trades up into it here. So we have optimal trade entry. Trades lower. Another optimal trade entry with a bearish order block. Isn't that a reversal pattern? Yes. It is. Price breaks lower. Small little retracement. Another optimal trade entry. And trades lower. All right. You can see price running up into the bearish order block. And breaks down, creates a small little fair value gap right there. So you know that this up close candle's low with the fair value gap here in the form of a SIBI, sell side imbalance, buy side inefficiency. Extend that out in time, and it trades to it here. Running above buy side liquidity. There, with optimal trade entry, we're in a premium here relative to this hourly chart. This high to this low, when price runs above, that is a premium. And it's also in a bearish fair value gap and a bearish order block in an area where the narrative on this level here suggests it's probably going lower. So this is an area where you can anticipate what? Short selling. Isn't that a reversal pattern? Yes. When you start looking at what I've already just outlined here, you can quickly see why when I show my trade examples, I'm getting in swing lows when I'm long and getting out even at profit taking at the swing highs, because I'm looking at all these things as potential reversal patterns. Ooh, somebody just had a light bulb moment. And that's what I'm referring to. And some of you that didn't get that, you're like, huh? Deer in headlight syndrome. It's not a knock against your aptitude or your intelligence. It just means it didn't register with you yet. And it's okay. There's nothing wrong. Everyone gets here at a different time. But these videos are here for you to go back and watch. And then when you do, when you learn other new things, it may be something I'll say later in this same video. It'll be like, there it is. I just got something new. And you do the Mick Jagger thing I do in in the house, dance around, because you feel good. It's hard to sit still when you get motivated. The market breaks lower, trades back up into the lower end of the fair value gap, and it starts to break lower. Consolidates, rallies one more time, consequent encroachment of the fair value gap, breaks lower, low end of the fair value gap again, closes in the fair value gap. That's a reversal pattern too. What's it reversing? This short little run here. Oh, that's not a reversal. Really? Okay, go long there. You're trading on a 1 minute chart. It's going to feel like a reversal pattern then. So again, it's all about what fractal you're in within the narrative. The narrative back here says we're going lower. You knew about that before you traded there. Consequent encroachment, optimal trade entry, bam, hits it perfectly right off of Wednesday's discussion. I said we can run above the short-term high and take up some buy-sell liquidity and trade up to the low end of the fair value gap. And that level is 93.78. The high here, exactly 93.78. How many examples do you need to see of this before you start saying, maybe there's something to what Michael's saying? Maybe these markets are absolutely controlled. Maybe he does know what's likely to happen, and it's transferable information that I'm going to learn. I just have to submit to more training, and I'll get it. Think about it. If I was a greedy SOB, as some people like to say I am, and I understand that for some of you, it's going to take a lot more time than you're willing, and others, maybe not as much, I would charge monthly in perpetuity. That means you have to pay every month to be here. But I don't do that. You pay for 12 months and then one charter conversion fee. That's it. And then you hang out with me with no more investment monetarily. It's just your time working towards that goal you signed up for. I'm still here. The 2016 group, they are not paying anything more. And I'm still giving the same level of content for them that you're getting now that your monthly payments are paying for. Because I appreciate the level of effort that this is going to require. And it's not about the money. I can make a lot of money just keeping people in the payment cycle. That's not what it is. But my time is worth something. The fact that I got to keep this together and I have to pay people to help me service all of you. I can't do this on my own. It requires money. And as much as I'm good-hearted, I'm not going to dip into my pocket millions of dollars to facilitate the needs of others when they don't make an investment on themselves. So I tossed that in there just to remind you that it may feel painful to pay for this while you're paying for it. But when you make that last payment, you've done all the hard work. Then you just still stay with it. Stick with it. And it will happen for you. When price hit the bottom of that fair value gap, beautiful delivery. Displacement, rebalance, isn't that a reversal pattern? Yes. They're all reversals. But what are they showing you? Points of continuation in an underlying narrative. It's the tops in a sell model. What did he just say? You're getting the highs, all the tips, all the swing highs when the market's bearish. Didn't realize that yet, did you? But that's what's going on. And that's what I was doing in those 1 and 5 minute charts. I'm selling short at every potential short-term high and buying at every potential short-term low, back and forth, back and forth, back and forth, in days that offer me a consolidated range. And when it's not in a consolidated range, when it's likely to continue with a big trending day, then I'm selling heavy on bearish days at all these short-term highs or reversals that create the short-term tops. And if I buy, I'm doing it with a very little exposure in terms of risk. I'm not doing as much as I do when I'm selling short, and I'm not riding it out to the best exit. I'm just getting some pips just to prove and show off that I can read price before it happens. That's what I was doing that for. That's what you see on my YouTube channel. Now, people that see that, they say, oh, that's MT4. He's using a fake server. He's using it. Okay. I'm telling you this stuff using TradingView, and it's going right to these levels before it goes there. You know what I already have in recording. All the watchdogs, the CFTC, FTC, Security and Exchange Commission, all of those people can come right on in here and see I'm on record. I don't have any fear whatsoever. And I can sit in a courtroom and do the same thing I do with you there. I am not worried because I believe 100% wholeheartedly that what I'm teaching you, you can learn. But you cannot learn it by just watching me do it or give you trades. That does not work. But you going in with a target in mind, with tools, okay? If I say, okay, look, there's your target. It's 25 feet away. And I tell you, here's your bow and arrow, okay? I give you, instead of arrows, I take your arrows away and I give you drinking straws. What benefit is that? You can see the target. You can grab the bow. Are you going to be able to put that drinking straw on the string and be able to shoot it down there? No. Why? Because that instrument, the straw, the drinking straw, is not the proper vehicle that delivers your expectation from where you are standing with that bow and the target I'm pointing at. But if I replace those drinking straws with a dowel rod with no notch on it for the string of the bow and no arrowhead, but I just give you a dowel rod, you can probably balance it on the edge on the string and pull it back and maybe shoot it. It might make it close towards the target. Some of you may hit the target, but it'll feel clumsy in your hands. And then I replace the dowel rod and I give you an actual arrow. It has a notch in its tail, it has feathers, and it has a tip on the end of it. When it is placed on the string properly and you pull it back and you've sighted up the target 25 feet away, some of you still might not hit the target, but the arrow will go in the right direction. And guess what? In instances like that, taking partial profits helps you. It encourages you to keep doing what you're doing. And others, they hit the target, they get that, yes, I know what I'm looking for now. What am I showing you in that analogy? It may sound silly. It may sound like, come on, Michael. Think about what I just explained to you. The drinking straw, the dowel, and the arrow. What is the arrow? The arrow is your favorite pattern or concept that you can see easily. It may not be a fair value gap. It may not be an order block. It may be institutional order flow entry drill. It may be the bearish breaker. It may be the mitigation block. You see? Whereas when you see me teach on something and I talk about the rejection block, for some of you, that's the drinking straw. You see me talk about it, but you just can't make it work for you. Does it diminish its effectiveness because you can't make it work? No. There's dozens of you that are saying, I know exactly how I'm using the rejection block and I'm in there on that. So is it the teacher or is it the concepts? Neither. It's the practitioner, the student. So I'm teaching you the optimal way of learning. I'm telling you where it's most likely going to go. I'm avoiding breaking the law as a trade advisor or a financial guide, okay? Because I'm telling you, this is where price is going, likely, most likely, okay? Your job is to use the things I've taught conceptually in that price run to get you in a demo account transaction that leads to that target, or at least moving in that direction. And over time, being here in the mentorship, you get better at doing that. And in the process, you filter out rejection block, mitigation block, breakers, order blocks, fair value gaps, vacuum blocks. All those things will blur and one will stand out to you. Now think about that. How many entry points for shorting did I cover just in this small little fractal? I've been talking for a long time. And they're all individual trades. And for some of you, you're like, I wouldn't have saw that. And there's no problem. Others, that's the one I saw. Well, there you go. That's the stuff that you're supposed to be recording in your journal. When you see those instances where you see it over and over and over again, that's the pattern for you. That's where your subconscious draws your attention to. You've drawn an affinity for that. And it's not because it's better than anything else. It's not because, it's the better PD array or it's the secret sauce and I'm just not saying it. It's the one that makes sense to you because every one of us looks at price uniquely. Even though we may see it likely going higher from a specific level to a specific target, you all will engage with an entry pattern and technique differently and still be profitable, but still have different results. That's why the people on the outside of this mentorship say, why doesn't he have millionaire students yet? First of all, it takes a lot to just get to the break even. And then from break even, the real learning. So from 2016 to now, that's unrealistic to expect because you're all still learning. It's not until the end of next year that I'm done teaching what I'm going to teach. So why should anybody have an expectation that someone should be a millionaire, okay, under my tutelage starting from 2016? No one's a millionaire in my mentorship. Not at least nobody has come forward and said, I have made $1 million trading live funds because of what you've taught. Because it's not realistic. No one's doing it. I have people reporting that they're profitable. I have people that are, working at prop firms now. They're working with real money, but I did not help them get into that seat. They did that on their own efforts, working hard, doing the things I'm teaching you here. So hopefully, I've at least whet your appetite for appreciating the level of working with reversal patterns. And again, there's no new curriculum. It's just turning your attention to what matters most. And then I'll start building on that where you get the narrative to justify the framework for reversal patterns. And then by the end of this month, you'll have a greater understanding. But I'm going to get through these charts now. So nonetheless, this is the hourly chart. We broke down below the sell side liquidity here, and we still have that level here to go with the sell side liquidity that's remaining on that daily chart. So 92.80 is down there too. That's the institutional level. Below that we have 92.50. I'd like to see it trade down there. Even if we get a little retracement after that, I would like to see it expand to that level initially. Let's drop down to a 15-minute time frame. I made a comment on my YouTube community tab that this video would be out and posted at 11 o'clock, and at this moment it's 11:21. So I'm a little late, and I apologize, but I've had a really wonderful weekend. We had family birthdays, and I have to prepare for my oldest son's birthday, which is tomorrow. So it's just been, I really enjoyed this weekend, and I hopefully encourage you all also to try to do the same thing on weekends. Try not to spend too much time with this stuff. All right, and here is the delivery on the downside with a 15-minute chart. And again, just a beautiful run right into that level. And I said that we would probably run up in here, clear up some of the buy side liquidity. But if it did anything above that, it would run right to the bottom end of that fair value gap. And to the pip. To the pip. As a reminder, we are in uncertain times. Try not to build too much confidence right now. Okay, I'm not trying to strip you of your confidence or diminish the confidence effect that this gives you, but it's not an enticement or an invitation to go out there and trade with live funds. Okay, just I got to keep doing that because I don't want any of you hurt. So anyway, you can see the nice swing here. Price runs up and we break down lower. Now, if we look at price like this, this is swing trading theology. Right there. And this has got to go up on the high. All right. So what we're doing is we're measuring the price run up here. So then you could use the high to the low. And then here is your negative 0.5 standard deviation. So it's 93.05. 93.05 is right in here. That's a target. Beautiful target. Where would you expect that? When this starts to break down. When it gave you your first sell signal here, you could anticipate that sell to this level. When it went to this level, as I outlined on Wednesday, when it traded there, when it starts to break down, you anticipate it running to there because this is your parent price swing. This run up sets the stage for a likely decline. The market rallies up again, and from that point here to here, this right here, watch. Viewing the marketplace as a sell here and buying it back at this price level. Okay, selling, buying back, shorting, covering, selling to buyers, buying from sellers. That's the market efficiency paradigm. I don't look at patterns for the sake of patterns. I'm looking at the basis of, I told you the buy side liquidity was here. It might run above that, but if it does, expect it to trade as high as the low of the fair value gap. That's the framework. That's what I outlined on Wednesday. That's the thing that you need to glean when I'm talking about what is likely to occur in the marketplace. There's some of you in here that like to look for the things that they can say, yeah, he was wrong about this. Okay, you're always going to find something wrong, even in your own trading. But if you only factor in or focus in on that, how are you going to progress? How are you going to go forward? You have to learn. Working out sucks. You get sore the day after, the second day after you worked out, it stinks. But you have to keep doing it. You have to tear up the muscles, tear them down to build them up. Well, if you tear down your psychology about what you're developing into as a trader by only focusing on the negative and only focusing on the fear of what if I do it wrong, why should you be fearful of doing it wrong? That's the whole reason why I tell you not to trade with live funds, because there's no reason for you to be afraid of being wrong. It doesn't take anything from you. It deposits understanding. It deposits that greater appreciation for the end result you're striving for. And even though you might stumble and fall and may not do it correctly the time that you practice and sit down in front of the charts to do it, if you tell yourself, I failed, I'm never going to get this, it poisons your perception about why you're even doing it. And so many people come in and they talk themselves out because they discover this takes a lot of work. And they also view me as a failed mentor because I'm not giving them trades. And I want those people to quit. I want them to quit. And they're welcome to go over to Forex Peace Army and make all the reviews or talk about me on YouTube videos. Do all that. That doesn't change anything. Doesn't change anything. I don't worry about that stuff. I don't lose any sleep over it at all. None. So you shouldn't lose any sleep over it. But we do this stuff week after week after week. And every single week you are inundated with new insights. Even though you think It sounds like it's the same thing. If you go into with the idea, he's going to talk about the same stuff, what's already happened, blah, blah, blah. Okay, go back to the previous recordings where I talk about what's likely to happen and why it should happen. That's where you're supposed to be focusing. Not, did it give me a trade? Did he outline the trade entry? Listen, I could do that every single day. That's not teaching you anything. I've already proven I can do all these things. I can see it before it happens. I can trade it when it's there. I can reverse, buy long, sell short. I can do all that stuff. I can do it in futures. I can do it in commodities. I can do it in Forex. Okay. We should be past all that. And for some of you that keep making these arguments for things not discussed in the mentorship commentaries, what you're doing is you're giving yourself perfect excuses to quit. And I'm giving you invitations to just simply quit. Because if you hold on to that mentality, you're not going to develop. You're going to stay in a rut because you want something that I'm not going to give. And you're ignoring the gifts that I'm lavishing you with every single week. You're getting everything you need and more. But when I outline these things, you have to go in and say, okay, what do you think he says this for? In other words, I'm pantomiming. Why did Michael say he thinks it's going to go up to this level, fair value gap? Why should it go up there? And if it goes up and goes down, where should it go? I've taught you that. I've taught you how to anticipate where it's going to go. Sell side liquidity pools. They're going to trade down to inside of a range. What range was that? The range on the daily chart that I said that is not what I anticipate as a bullish order block and then rally higher. This in here. Oops, wrong one. That's still the same area though, nonetheless. Daily. And zoom back in. See how much discussion I've had already, and we haven't even got out of dollar. So, and you guys want me to do, can you talk about gold? Can you talk about oil? Can you talk about palladium and silver? And can you talk about stocks, cryptocurrency? Look, it's a lot of things, and I'm trying to keep your focus on 3 things that are closely related. It's a triad: the dollar, the euro dollar, and the pound dollar. I don't care if that's not what you want to trade. It's how you learn how to trade. You look at closely correlated pairs or markets, and you look at intermarket relationships. When the correlation is there, when it cracks, it gives you insights as well. Everything that I'm teaching you with these vehicles, you can apply it to whatever else you want to trade. If you want to trade the beast, the pound yen and euro yen, okay, that's fine. You just have another step in the analysis. You have one more stage of analysis to look at, but you still start with what I'm teaching you here. It's the same thing, folks. It's the same stuff. But when I said the market's likely to trade lower, I'm not looking at this as a bullish order block to buy. Okay, even though we have what would otherwise be seen by people that think they understand imbalances. They, oh, look at this. This is a fair value gap versus a liquidity void. It's going to go down there and create a buy. I told you in advance before we even seen the decline. I said, that is not what I see. I see it trading down to here. Whereas in other instances, if this was really bullish for dollar, I would have said, okay, it's rallied up to here. It could come to this price point and decline and then come down into this order block and then rally. But because I'm not bullish on dollar, I've taken your attention away from falling victim to this. Now, here's what could happen. Murphy's Law steps in and says, well, let's teach ICT some humility. And then next week it starts rocketing higher on the dollar. And guess what? I'm wrong. But it's just a way for you to go back and look at old videos that are still useful. Just because they're old and years ago, listen to the things I'm talking about. And if I say I don't see this, I'm teaching you. You don't realize it, but I'm teaching you in those very moments. I'm teaching you, why is Michael not seeing that? And go through the things that I've been educating you with. And you'll see there's things missing that other areas where I say this is bullish, this is bearish. All those other things I've given you in other videos, maybe before that time, or I come in afterwards and fill in the gaps. I'll say, this is why I said those things. Okay. But it's those moments in the commentaries. That's the real lesson. It's not these core lessons you get each month that you pay for. That's just our language. Okay. That's the building blocks for you to get everything you're supposed to be getting from the commentaries. So that's why sometimes you'll hear me say certain things and you haven't gotten that far in the mentorship core content. And it's like, what are you talking about? Okay, that's a question you write down in your journal. And then eventually you'll get to a lesson, or I'll talk about it and build more information around that idea. And then it'll be, oh, okay, now I know what he's saying. But imagine thousands of people all having that moment of uncertainty and sitting down and writing an email to me, just me, the only brain trust in this entire company. Okay, I'm it. There's no one in my staff that can answer your technical questions but me. So some of you get mad and say, I'm paying and I should have access to you answering my questions. And my answer is, it gets answered in this service. You just have to submit to the time getting to it. And you understand, once you see this happen by the natural progression of going through the content, it disarms you. It helps you relax. It's like, oh yeah, he isn't holding anything back. It's just me being impatient. And it's not always a rude impatience. It's just an excitement. You want to hurry up and learn something new, or you think that the thing that you're holding yourself up with, I need to know how he knows which order block, because that's what everybody comes in with, that same thing. Just all I need you to know is tell me which order block I'm supposed to buy and which one I'm supposed to sell. And I don't need anything else. I've already done that on the YouTube channel. But you need to know how to see the underlying narrative. That's mentorship. That's why I don't go on YouTube and outline the future, because that's mentorship. Mentorship is me taking these pieces of the puzzle and sitting at the table with you, and I'm starting to build the border with you. Okay, I say, okay, now watch. It's easier to do this once you got the outside straight edges in. And then you start working your way from the outside into the middle. But you're not going to see the clear end result, which is the bullseye of where you're going towards when you first start, just like a puzzle. A jigsaw puzzle. You start on the outside edge and you can only see that. What's the picture? You don't know. Unless you have the box where it shows you what you're actually putting the pieces together. See, that's what you don't see. That's what I hide from the public. You have no idea where you're going in here until you progress closer and closer to that goal. And that goal, I never say this is what it is, because you're going to see a different goal than 25 other people in this mentorship. And it's not different in such a way that it's completely contrary to what you should be seeing. Everyone sees what they see in price because of the commentaries. It's going to trade up to this level here. It did. And when it trades there, we anticipated possibly going lower and to blow out the sell side liquidity. Well, it's happening. It hasn't done that yet, but it's doing it. And that's what I try to do with the commentaries. I give you just enough information to practice for the right now. Not so clear that you can run a signal service, because I teach you how to operate a signal service when you are ready to do so, and do so without compromising your membership here. You cannot teach my concepts and remain here. As soon as I find out you're doing it, you're out. And there's no forgiveness. Zero. None. If you submit to the process here, you will get everything and more that you're looking for. But if you make a mountain out of a molehill and you build this, I need to have this answered right now, or I'm just not going to be able to do it. Well, I believe you. I agree. Because you have stunted your growth, not because of anything I've done or a lack of doing, but your perception about how you should progress. Then you're the teacher. And if you're the teacher, then you don't need me. And I agree, you probably should quit. But the student is not greater than the teacher. And that's going to sound like arrogance, but it's not. You have no idea where I'm leading all of you. You have no idea. But each week you're getting closer and closer to it. And for some of you in the 2016 group, you're like, I have never imagined knowing what I know now. These are quotes. I'm paraphrasing, of course, but these are the ideas I get. And usually it's like one-liner sent to me in an email, like, Michael, You could have never convinced me in any marketing that I would be able to see what I see now back in 2016 when I first started the mentorship. And I agree. And that's why I said, once you see it, you all think it's that one little moment where an order block works. No, when I say once you see it, everything, the matrix, your model, operating before it happens, you see it happening. You see what it's going to do before it does it. That's contrary to everything in this industry because they tell you it's random. Is it really random? Does it feel like it's random when we were together? Because it doesn't feel like it's random to me. And it hasn't felt random for 27 years. And you're all worried about, you're teaching so many people, it's going to stop working. No, it's not. It's just going to get better. It's going to get better because it brings in more traders, more liquidity. Oh, but it's going to offset. No, there's always suckers all the time. P.T. Barnum said it perfectly. There's a sucker born every minute. Think about it. All these people making these YouTube videos talking about how they're going to teach people with RSI, moving average crossovers, harmonic patterns, and Fibonacci, Wyckoff, supply and demand. There's always new meat for the grinder. And you are on the side of the grinder. You're not going in being ground up. You're doing the grinding. That's encouraging. And I used to have a moral dilemma. I felt guilty that I knew this and I was hurting other people. And as a Christian, it was for a little while hard to the point where I had to stop. It bothered me psychologically that I felt like I was hurting other people. I was taking from them. And then it just dawned on me when Christ taught the parable of the talents. He gave me this ability. I prayed for it. He gave me understanding, and he continues to deposit understanding in me. And I'm blessed because of it. And the transaction was, if he blessed me, I would bless others. And that's my life. That's my purpose in this world. That's what I do. That's why I'm passionate about it, because I knew where it comes from and I'm connected and I love it. I love him and I always give him the credit. That's why I want people to credit me, because I want them all to know I did not earn this. It's a gift. And this gift, like a talent, was given to me and I didn't bury it. 3 people in that parable. One person gets more than the others. The second one gets more than the last, and the last just gets 1. What did they do with it? The first 2 put it to work, and they made a return. That's trading. They invested. On the third, God gave the third one 1 talent. Why? Because he didn't like him? No, because he's God. He knew he was going to be lazy, but he still gave him the opportunity. And he says, well, I'm not going to risk anything. I'm just going to go bury it. And that way, when he comes back, I'll give it back to him. I didn't lose anything. And in the parable, it says, God's angry with the third one. He says, you wicked and lazy person, you could have at least taken it and put it in the bank. And at least I would have made interest there. In that parable, put my heart at ease about trading. That's investing, folks. That's what you're learning how to do. Take what's been given to you, either by earned wages at your job or profits in your speculation, and then reinvesting that. If you learn this information and you just keep it in your head and never practice and learn to do well with it, you're that weak-minded, lazy individual that you just see one talent, one trick pony mentorship. That's what you think you see here. Yet one little thing, and it's not. You have a complete panoramic view of the marketplace entirely from all asset classes. That's why I don't say it's just a Forex. I just like Forex. But I tell you that this stuff works in commodities. I even show you specific things with the commodity market that aren't necessarily related to Forex. Open interest and the unique seasonal tendencies that occur there. It works with stocks. Look at Tesla. Okay, look at Tesla. The last week of October last year, I tweeted. I said, here's a chart. You tell me what you think you see. Is this a buy or sell? And I said, it's a buy. And you all know it was a fair value gap buy. And it went up thousands of dollars per share from that moment. Was that a fluke? Listen, you got to get busy. Okay? You got to get busy because we're getting ready to go into an exciting time. The market's going to be moving all around next year. You're worried about right now. Oh, you're not wanting to talk about what's going to happen because of the election. You're scared. You're nervous. No, I'm being responsible. I'm being responsible. I've been in this a long, long time. I've had good times, I've had bad times, and I know where there's trouble. And this has trouble written all over it. And I don't want to lose money. I don't want to see you lose money. And I don't want to see you hurt yourself financially with a small little window of opportunity that is not going to change millionaire status overnight anyway. Okay? No one's going to be able to look at the next couple of weeks and say, if I would have did this, I would have made $1 million. But that's what happens when you're a greenhorn, when you're new. You think all these next big Bitcoin moves. That's not happening, folks. Okay? It's better to sit still, sit on your hands, don't let yourself get hurt. The holidays are coming up. We've had a really hard year. Prepare your family to be engaged with one another. That's what you should be doing. Okay? And prepare for uncertainty. Get some things in your home in case things get hard. Extra food, extra staples, clean supplies, socks, underwear, detergents, all those types of things. Anything that you use, try to stock up on that. And prepare the best way you can. Canned goods, things like that. If you don't have a way of defending yourself, and I know some of you probably aren't pro-gun, you don't have to have a gun, but you should have some measure of defense in case things do get nuts. And maybe have something in your vehicle when you're driving around. Okay, it doesn't have to be a lethal instrument. But just be careful because we're going into some pretty crazy, perilous times. Let's just say it that way. All right. And I hope I'm wrong. I absolutely hope I'm wrong. But you got beautiful distractions with what you're learning here. If you want to sit on the TV and watch, I don't watch TV, but if you want to sit on the TV and watch these newscasts and fill your brain up with negative, Biden's ahead in the polls. What polls? That's not the election. Trump's going to win by a landslide. How do you know? No one knows that. Okay? So getting caught up in all that stuff, it's stupid. It's nonsense. It's the distraction. It's eating up useful time. Take all of your energy away from the time you spend with your family and working, and invest it in this, what you're learning here, because what you're learning will remove a lot of the things that you would be fearful and uncertain of by looking at all that stuff. Like, I'm not worried regardless of who gets in office. It's not going to change the way I live. And that's what I'm trying to teach you. It does not matter if it's Republican or Democrat. Yeah, if Biden gets in there, I'll probably have to pay more taxes. Who cares? I'm still making a whole lot more if I was working a job. You would be too. It does not matter what your tax rate is. Okay, and this is one thing I learned from Ken Roberts, my original mentor. It didn't really teach me really much of anything in terms of trading, but he gave me one thought process. My father is basically a balding man. I mean, he's got that hair above the ears and lower part of his back of his head, but he's bald on top. And as a younger man, when I was more envious of people that had better hair than I did, I'm not bald, and I started having a fear, unrealistic fear of losing my hair. So in my mid-20s, I started shaving my head to get prepared for it, because my father lost all of his hair when he was 30. And I was married. It doesn't make a difference. I was like, my wife, I told her, I said I might lose my hair, and I wore a ball cap all the time. So it was almost like I was asking for it to happen, and I never lost my hair. And some of you are probably thinking, what has this got to do with anything? I worried about something that never happened. I'm 49 next year in 2021. I'm 48 now. I'm 48 years old. I'm 18 years beyond the point where my father lost his hair. I obsessed when I was in my 20s about going bald, and I didn't ever lose my hair. I have all of my hair. I have no bald spots. I have no weak points in my hair. It's the same hair that I had when I was a teenager. There's nothing different about it, except for it's gotten a little bit darker, and now I have a little bit of gray, which I'm actually inviting. I want that to happen. But nonetheless, if you sit here and you worry about what's going on in the world, then you're going to get upset and scared. And then that obsessive thinking is going to keep you from learning what you're supposed to be learning here. But if you block all that stuff out that you can't control and worry about and change by worrying about it, don't worry about it. Take all your energy and divert it into this. And it's a beautiful distraction, because number one, you're building yourself up. You're teaching yourself a skill set that you can pass on to your children. I look at what my kids were learning when they were in public school. Before I pulled them out, they were learning things that was shaping their mind, and not for the things that I wanted them to think like. And if you can instill in them a sense of worth and importance and value in themselves, and how they can take what they organically grew with their own efforts and belief by investing and growing it, they will feel so much better about themselves. They will feel so much better about their future. They'll conduct themselves in a better manner, and they won't be these ugly individuals that you see in the world today. They will learn to be able to help others and feel good by doing it. Because why? Reaching in their own pockets and giving another person they don't know that's in need $100, $200 to pay for groceries when they can't pay for everything right now because they lost their money through their wages and they just can't make it. It feels good. It feels amazing to do that. And it's a feeling that is contagious and infectious. When you do it one time, you want to do it again, and you want to do more of it. And it's fun to not get any attention for doing it. And if your faith is in line with what I'm saying, I believe a reward's waiting for me when I do that. That's why I don't go online and say, this is all the things I do. I've dropped hints about things I've done and do in the past, but I don't make a show of it, because then that's my reward. But you should be taking this information and putting all of your efforts into this, not watching TV sitcoms or the news and being distracted by that nonsense and letting it steal from you time that you could be investing in yourself. Because if you're investing in yourself, you have to remember that not only are you investing in you, your individual person, but you're investing in your family after you. Don't you care about them enough to help them not be tied down with the cords of slavery that this world puts on all of us? Not just in America, everywhere. We are a slave nation everywhere. We're overtaxed. And you thought I forgot about what I was going to say about Ken Roberts, didn't you? The thing I learned from Ken Roberts and the whole thing with the hair, they gave him a question when he first started learning how to trade commodities when he was younger. He said, aren't you worried about losing your hair? He goes, listen, if I lose all my hair, but I make a lot of money, I don't care. And he said, well, what about when you're trading heating oil and gas futures? Aren't you afraid when it goes up like that, how expensive gas is going to be? He goes, I don't care. They could charge $10 a gallon with a V8 cylinder engine. I don't care. I can afford a lot of gallons of gas. with the money I can make in trading. That resonated with me. As soon as I started making money, it's like, you know what? I'm not worried about what things cost. So I don't care if Biden gets in. I don't want it to happen, just so you know. I don't want him going in there. I have corporations. I have businesses. I have things that stimulate the economy. And yes, while it helps me make money, it also allows me to spend money and pay other people. And when you hurt a company's ability to be profitable by taxation, while I'm not necessarily leaving the U.S., it does drive them out of the U.S. And then that takes away the jobs. So I don't fear how much taxes they're going to raise, because I can always outpace any tax bracket they put me in. Now let that settle in for a minute. Let's think about what I just said. I don't care what tax bracket they put me in. I can outpace that. I didn't care if Bernie was getting in there. Oh, we're going to tax everybody, this and this and this. Yeah, it's incredibly stupid, but I don't care. I don't care, because working a job like we all have done, and you probably all still do, you get a wage and you get a tax bracket based on that, and you pay that money. It's not fun to do it, but even if you didn't have taxation, you'd find a way to spend that other portion of money that you're being taxed right now. You would spend it on stupid stuff. You wouldn't invest in yourself with it. So you really can't say, oh, if I wasn't paying tax. No, you would just blow it on stupid things, because you don't learn these skill sets that you're learning here in school. You don't even learn it in college. I have so many college professors in this mentorship, and they're like, this is incredible. Like, you know, in master's level education, they don't learn how to think about money and markets like this. And I know. That's why I literally tried to get into the school systems in my area so I could do, like back when I was younger, we had assemblies, you know, about once a month or so. And someone would come in, they would do like magic tricks, or they would talk to you about, you know, hey, you know, when you get out of school, you can go to the military, or you listen to them and they would just be a musician. They'd say, look, you know, when I went to school, I taught myself how to play the guitar, and I want you to think about what you can do on your own too. And it was just nice to see those things. And I wanted to go in and kind of be like a motivational speaker and say, look, you know, math right now might suck for you. English might suck for you right now. And it's boring. It doesn't feel like it means anything. But if you learn how to communicate well, and you understand math well, you have the ability to make an incredible life for yourself. But it requires investing in yourself too, and believing in yourself. And I had sat down and I had come up with a complete curriculum that I could deliver inside of 45 minutes. And then allow for like 15 minutes of just random selection of people raising their hand for any kind of questions. And you know, the school system would not allow me. They would not allow me to do it. And it wasn't I was asking for any money. I was offering my time. And I would have been willing to go 100-mile radius from where I was living at the time. I would be willing to do that daily. And no school system was willing to do that. No, I'm sorry, we can't authorize that. What? All right. And it's very deflating, because I was highly motivated. I wanted to get out there and just get it out there and just do it and do it. And Baby Pips was the best alternative. And that's what happened. That's why I stepped out here. That's why and how you ended up here. The school system said no. No, sir, we're not interested in you making a deposit like that into our children's minds. We're busy right now twisting it up and making them fearful and hating each other and resenting who they are. And then now we're surprised looking around 10 years later. Look around. It's not just in America, it's everywhere. It's as organized control, organized thought control, and it's disgusting. So I'm here just to remind you, as we transition into Eurodollar, that you're learning skill sets that are not just monetary reward based. It is love for your neighbor, respect for your neighbor and their things. You don't got to destroy things because you're upset. And just because you didn't learn it in school doesn't mean it's not available to you. So when you learn this skill set and you're able to pass it on to your children and they're able to pass it on to their children, you are upsetting every design that everyone out there that has been put these narratives in motion in the world. You know, extreme hatred for one group over the other. You know, people not wanting to live next to low-income housing developments and public housing projects. I have worked with young African men and women one-on-one, and I can tell you that culture, that demographic, that segment of population, they get a bad rap for a lot of things. And many of them grow up without a father because they're taught not to be fathers. And this could easily be viewed as a racist dialogue, but I want you to listen to what I'm saying. I worked with young black women and young black men, and I counseled them, and I told them that they don't need to go to college, and they don't need to hate society and other people to have things because they don't feel that they've been given a fair shot. You don't need to go to college. You don't need that. You just need to know certain things and have the ability to trust that it takes a lot of work and effort, and you have to earn it. You have to work for it. That means maybe having to work a full-time job and a part-time job. And I did that before. No one's owed a free lunch. It wasn't given to me, but I know how to empower other people. And I've watched young men and young women listen to this advice and turn their entire legacy around. And then they have counseled their friends and encouraged them to do the same thing. It's infectious. That is purpose living life. It's my passion is teaching, just changing the thought process of other people and then opening their minds up to what's available to them. And you don't need a lot, but you do need time, and you need the effort put forward, and you have to work for it. A little bit of money, just a little bit of money over a period of a month, saved, working towards a goal, and applying that with compound interest. Doesn't matter how little you start, but if you keep putting that in there, no one should be working after 3.5 years. Seriously, it's just, there's no reason for it. But getting to that point where you know what you're doing for 3.5 years consistently, that's an undetermined amount of time. For some people, it might be a couple years. Others, it might be longer. For me, it took 6 years for me to figure out what it is I'm going to do, put it pen to pad, and formulate how I'm going to do it. And then there you go. I was off the races. And for some of you, it may not require 6 years. But our world is lied to every day. You're not good enough. You don't deserve it. That guy or that girl has more than you, and it's unfair. And if you constantly are bombarded with that through movies and the dialogue and the narratives that they push down our throats, all that stuff makes this world toxic. It sucks. And honestly, even with the resources and the money that is available to me, it's still ugly. Money doesn't change it. It just helps me avoid certain things, but it's still out there. It's still ugly people. And if I drive a certain car of mine, people look at me and they'll nod and say, yeah, it's cool. Other people will look at me and roll their eyes like, this guy thinks he's something better than me. And I'm just driving to the grocery store. I wasn't thinking I was better than anybody else at the time, but you can read people's faces. So I felt inspired to say all this stuff so far today in this video, and I want to kind of get through the rest of it kind of quickly. But I got a lot of questions, and I went through a laundry list of things that were asked of me to comment on, and I did it. So if I said anything to offend you, it wasn't meant to offend anyone. I wasn't trying to talk holier than thou when the times I was referring to the parables, but I just wanted you to know that there are different ways of interpreting what we experience as daily, day by day living in this world, and how we can interact with one another on a better way and encourage one another. Because if we can encourage one another and also guide them where they can improve upon themselves, these young men and young women, prior to me talking to them, they didn't believe they had a chance. They felt like they were just a victim. And because they're a victim, they always were lashing out. And I watched some of them that were very argumentative in the beginning, ignorant really, if I'm going to be honest with you, become the most beautiful people, smiling, appreciative, and just watch them transform into someone that was encouraging their friends. And they brought someone else the next time and say, look, this is my friend, and they're angry too. They're like, I don't even know why I'm here. And then at the end, they're like, I'm so thankful that you showed this to me. And that's something I get to carry around. It's emotional because I feel effective. That's one of the passions I have in life. I do this because I feel good doing it. And it's encouraging to me when I see other people do well and they encourage their own family members. I love that because I'm being used the highest form that I could ever be as a human being. I love that. And it's not about me. It's about you. What you are going to do. I'm interested in that. I'm not interested in your opinion about me. I'm interested in what you do with this and how you impact other people. There's treasures in that. And it's beautiful. So go to Eurodollar. All right, so here's Euro. And we got our pop up in here. I mentioned Wednesday, some of you may see this as an imbalance and expecting it to trade lower. I did not see that. I said that we were likely to trade higher. And we got the higher run here. We didn't get into that breakdown lower. And I said I wanted to see this stay as a breakaway gap. It looks like we may have that. Low resistance liquidity run framework here. So we're going to look for the willingness to trade up there. Now it couldn't, because of the environment, like I mentioned at the beginning of this video, we could potentially see this thing completely unravel and go the other direction. That's likely to happen. And if it does, don't build so much into it like, oh, it's failed. It doesn't matter. This offered a week of trading. That's all we're doing. We're trying to forecast a move within the next coming week. That's it. That's all the time horizon I want you to focus on right now. And that gives you more than enough. But we have a lower high here than this one. So we're going to look to see if we can get above that. That's the next threshold. And I guess initially this one and then this one. Okay, but start here and then here. And how we trade, if at all, up here, we'll see if we're going to contend with this, because you still might have an issue straight away in the opening of this week. Hourly chart. Fair value gap. Trades down to it. Optimal trade entry. Relative equal highs. Rallies. So it delivered as we were expecting. And we're going to look for continuation on the upside. And I would have liked to seen it not create all this back and forth in here. I would have liked to see it come down a little bit in here and use one of these down closed candles and then offer a rally off of that with the bullish order block. And it still might be something we could see early on in the week. On 15-minute time frame, again, just kept grinding higher, crushing any short selling on Eurodollar. So it was nice to see that, contrary to what some of the smart Alex were thinking they were going to have happen in YouTube. And again, real nice fair value gap there. Trades down into order block. And and then rallies up. And then the optimal trade entry, institutional order flow entry drill, order block overlap, pow, takes off. Relative equal highs taken out, buy sell liquidity in the framework of what? Higher high here. So that's a high resistance liquidity run. And that's why you had all this press. That's the signatures you see when you have a low resistance liquidity run. It's easy to run through it. It's like this kind of price action. But high resistance, it's back and forth, pressing deeper, but still not that real quick run into the buy sell liquidity. Okay, so you can see the contrast there. And in cable, we're zipping right on through this real quick. Lower time frame first. Again, nice run higher. High resistance liquidity run. Relative equal highs. I said we were going to probably trade up into that more convincingly. We've done so. And in hourly into daily, we are trading up into that breaker almost, which is here, that red line. So we're just shy of that. Watch that one. I could act as an area. We get some resistance there. I'd like to see this break on through it. We could rebalance to this low here if it needs to go deeper into the breaker, because the breaker is all of this. Okay, these down close candles. So it could come all the way up into this area here on this low at 131.40. That could be where it trades to if it's going to go above this level and still just hit that level and then roll over lower. It could happen. But I'm being real careful with cable going forward because I've already outlined that in multiple videos. So everything's staying as what we outlined thus far, and this is going to be the end of the video. I've talked a lot in this, and I'm probably upset or bored some of you, but what I said from the heart. Until I talk to you again, I wish you good luck and good trading.